is now above 110. Let's also put focus on the chemical space this morning. Nuvama says that the weakness is going to persist in Q2 earnings for the specialty chemical players. Rohan Gupta, director at Nuvama Institutional Equities, joins us now with his call on the space and Q2 expectations. Rohan, hi, great to see you on the channel. Wanted your thoughts first, if you could just lay down the framework for us. What is the expectation this quarter from the sector, and what are your top buys now?
So Sonia, good morning first of all, and thank you very much for having me on the channel. So yes, we definitely have highlighted that the weakness in a specialty chemical basket is likely to continue what we have already seen in Q1. Q2 is not likely to see any significant improvement. Actually, for some of the companies, it may even see worse than the Q1 because the bottom was not made out in the Q1 for some of the companies, especially in refrigerant gases and some of the companies which are primarily catering to agrochemicals, probably players like SRF, Anupam, Gujarat Fluoro. Some of these companies are going to witness further weakness in the results in Q2. As far as the improvement is concerned, I think a couple of companies are still isolated from this weakness across the globe. PI Industries is still maintaining their earnings growth momentum, given that their key product, pyroxosulfone, it is still showing a strong volume growth. Another company which are mainly catering to FMCG industries, players like Galaxy, Fine Organics, some of these companies may still able to defend their earnings growth. But yes, all said and done, we are still very negative as far as the specialty chemical industry is concerned in the near term, especially in Q2.
Negative in the near term. Morning, Rohan. Good to see you. When there's been a bit of a spurt in prices of some basic chemicals. Why is it? Is it because of lower dumping by China, or is there expectation of a recovery from here on?
So Nigel, it is all about that how we see when the prices have fallen from almost $20 to $7-8, and if we see that the prices have gone to $8 to $9, I do not see actually it is actual recovery. They are just bottoming out, and probably a 5 to 10% to 15% improvement is not a very important sign to read right now, because the most important thing to look at right now is that whether the volume growth is coming back, which we are not seeing. Because in specialty chemical, the global inventory still remain on a higher end. With the rising interest rate scenario, global players or MNCs are still reducing their inventory levels. So the demand scenario still remains very weak. Some of the chemicals, definitely you are right that some of the commodities have witnessed some kind of price increase. But I think that is just only from the very bottom. Prices have gone up by 10 to 15%. But I still don't see it as a very solid recovery or which is sustainable, because until unless we don't see volumes coming back, this is not likely to sustain. And we believe that volume growth is still likely to remain weak in the current quarter.
Rohan, you did say that some of the companies which give chemicals for refrigerants, etc., are likely to do well. Wanted your thoughts on something like a Navin Fluorine. It's down 25% from its highs post the management resignation. Do you think now the stock comes at attractive levels, or you would wait for some more time, some clarity at the leadership before you dive in?
No, Mangalam. I said that for the scenario for the refrigerant gas players still remains weak. The demand it still remains weak. There is no recovery, and also this is not the season for the ref gases. So global environment, also in the domestic environment, refrigerant gases prices are still weak only, and we do not see any recovery near term. As far as for the Navin Fluorine, there has been an unfortunate event. The key person leaving from the company, I think that is what weighing down on the stock price. I think that is the prime reason why the stock is down. As far as their current business is concerned, I think it is likely to remain stable. They are expecting a lot of projects to go on stream over next 2 years. If they are able to deliver on them, I think then the stock price may see some growth going forward. But as of now, the current scenario is concerned, it is weak for everybody, including Navin as well.
All right, Rohan, we'll let you go on that note. We're heading into the market opening, but thanks a lot for your thoughts on, the specialty chemical space. So negative and cautious on that front. But for the market, it's interesting because TCS is the one that's dragging the market lower. Even